that time of the year again when all eyes are focused on the budget for the upcoming fiscal year. Feb 1st, a Saturday this time round, is when the next budget will be announced. Finance Minister Nirmala Sitharaman held her sixth pre-budget consultation meet today with prominent industrialists. Keeping in mind the gloom surrounding macroeconomic indicators, what's on India Inc.'s wish list this time round? We know that FY21 has suggested a reduction in personal income tax, what with the pressing need to revive consumption. Other suggestions include a further simplification of processes and improvement in ease of doing business. A reduction in taxes for home buyers also made it to the table. But before we go further with the key question of what SOPs will really revive animal spirits and how much can be done in the budget? That's the big question we're discussing. But let's hear what top industrialists said today.
Indian consumers have been enjoying very, very low rates. They will continue to enjoy low rates. But I think we need to have a balance between the requirement of investments and the consumer on the other side. The industry has not been able to have an orderly, mechanism to get to that point. We are, unnecessarily killing this industry in a manner and way which is not conducive for our industry.
Talked about ease of doing business, which are the issues concerning many industries.
It's centered around more of what can be done to stimulate growth, to facilitate the ease of doing business. There was a suggestion made by FY21 which said reduce income tax rates at the lower end so that more money is at the hands of the consumer, which could be used for consumption.
It's interesting comments there, looking at how much of the focus is on reviving consumption rather than any SOPs that the corporate sector is asking for particularly. And also coming just a few months after a major reform, which is a reduction in corporate tax rates. So what really can the budget do for corporate India? Joining me now to talk more on this is Sumant Sinha, Chairman and Chief Executive Officer of Renew Power Ventures, R. Sriram, Resident Editor of Economic Times, and Gautam Chikkarmane, Vice President of ORF. Welcome to all of you and thank you for speaking with us today. Sumant, let me come to you first with a very basic question. It's not like there have not been measures post the July budget to help out corporate India in different sectors as well, in fact, and at different levels. The biggest one being, as I mentioned, the reduction in corporate tax rates. So what really do you expect from the budget? What more can be done?
Well, the corporate sector is a subset of the overall economy. And as long as the overall economy is not firing and doing well, clearly top lines of corporates will also be impacted. And so therefore, yes, the corporate tax reduction was obviously a very big deal because it does improve the overall profitability of companies. It does leave them with more money to invest, in the future. But unless top lines recover, I don't think confidence is going to come back. And given the fact that the nominal growth of the economy at this point in time is only about 6.5%, that's obviously not sufficient to revive top line growth. So I think that's really what a lot of people are saying, that at this point in time, we have to find a way to get more consumption demand going. We have to find a way to revive the demand side of the economy. And once that happens, then automatically corporate bottom lines will improve, top lines will improve, and sentiment will begin to come back. So I think that's really where a lot of the sentiment is at right now. I don't think corporates really want something or specifically things for themselves. Of course, there are a few things that can still be done in terms of things like long-term capital gains tax, dividend distribution tax. Those are things that can make the overall capital markets more efficient and so on, and can make it easier for more investments to happen. But I think fundamental to the whole situation right now is how to get GDP growth back from the 5% and below rate that it has got to back into a more positive sense of 6-7% growth rates. If that happens, even at the cost of some inflation, I think automatically you'll see people begin to become more optimistic and start feeling healthier about the economy. So I think that is essential.
Well, very interesting point there, Sriram. I remember there was a time for several years whenever you asked any corporate before the budget that what do you want, the first thing on the list used to be bring GST. GST is now here. and the corporate tax rate cut was another one. That's pretty much here as well. But it's not necessarily brought the gains that they expected. We know that new private investments have hit a 16-year low. The idea of the corporate tax rate was that, you know, India Inc. would invest more and increase, in fact, investments. That hasn't happened.
Well, I think you've got to look at it in two different ways. You know, one way, there has already been an impact of the corporate tax cut. We saw that in earnings growth in the second quarter, and we'll see more of it in the earnings growth in the third and the fourth quarters and for the full year. The EPS expectations and estimates have been increased. Market has reacted to it. The multiples have got adjusted. So that has really happened. As far as new investment is concerned, I don't think one can and one should pitch a lot of hope on corporate tax cuts per se, because there are a lot of other issues and problems with the economy which are actually preventing or making it difficult for businessmen to invest. I mean, if you look at some of the, there's one aspect is the debt aspect, the fact that a lot of the companies are really heavily over leveraged. A second aspect is some of the big companies, the big conglomerates and the big investors have already completed their massive investment programs and plans. If you look at Reliance Industries, for instance, the whole of this decade they have been investing, and now they have put a stop to it, and now they are in a consolidation mode. And I think quite a few corporates like that who are in a very similar situation. The third aspect is, if you are in an industry like steel, cement, textiles, would it be better for you to wait for an opportunity to spring up from the bankruptcy courts, where you can buy a company and buy an asset at 1/3 the value or half the value, rather than go in and make fresh greenfield investments? I would suspect that a lot of companies are probably waiting to make, easy, cheap pickings from the NCLT and the bankruptcy court, rather than go and make this big investment. The final point is that a lot of changes that have happened, especially from the government side so far, has made it very difficult for corporates to actually contemplate investment, because things are not easy anymore. There was a time when you could get coal blocks on a nominated basis. Now you got to pay for coal blocks. There was a time when you get a lot of the mines absolutely free, or just at a very nominal cost. Now you got to pay for a lot of them. So the calculations have gone completely awry, and with banks also tightening on infrastructure funding and big project investment, it is not easy going. So I don't expect corporate investments, the big heavy ticket corporate investments, to revive quickly. I think it's going to take time, another 3 years at least. But consumption is another story, and I've said this before in the program. I think there are signs of revival in consumption, and that's probably going to gather pace in the coming months and quarters.
Let's hope so. Let's hope so, because that's what corporate India is betting on as well. But I want to come to specific points and, what different sectors can ask for. Gautam, I hope you can hear me clearly. But, the broad question being asked is that a lot has already been done per se for India Inc. and for sectors in pain, whether it's auto, real estate, telecom. Of course, now they would hope for relief from the Supreme Court, and some kind of relief has already been given on payments, etc. What more can Finance Minister Nirmala Sitharaman do when they go there? Broad brush demands like increased consumption is something that everyone wants, not just captains of industry.
So I came in late, but the person who was speaking before me and who was talking about corporate investments being delayed or held back for some time because of whatever, I think, policy uncertainty, I would agree with that. But I have 3 other points to make, and I'll just quickly make them. I think the first thing is Nirmala Sitharaman needs to decide whether she wants to breach the FRBM glide target of 3.3%. If the answer is no, then there is nothing that she can do in the budget except cut expenditure. Where can she cut expenditure? Possibly education, healthcare, defense. Should she cut that expenditure, and how, to what extent, etc., is for her to decide. Because on the revenue side, we are clearly in a slowdown. Tax collections are going to go down, or perhaps not match up to what were expected. So if the budget needs to be balanced, the only thing that she can do is cut expenditure. If she wants to breach the glide path, then the question is, where will she invest that money if she wants to breach it? I would suggest, and it's a no-brainer, frankly, it should be on infrastructure. She says that the pipeline is ready for 100 lakh crore of infrastructure projects, and I think if the pipeline is ready, let the money flow. The second point I want to make is on expenditure, which is that she needs to, irrespective of how the finances are, I think now it's the time for the government to tighten the purse. There is no space for extravagance, political extravagance, waivers of loans, etc. I don't think the government has that kind of money anymore. This is the time for wealth creation, to encourage all industry, entrepreneurs, startups, to put money, put ideas if not money, get the economy going, let the money flow, get jobs done, let people spend money. I think that's the second thing. The last point that I want to make, and I think this could be a little controversial, but the government seems to be moving on, is that the stock market has given this government an extremely long rope. Despite the slowdown, despite all other problems, despite tax revenues not matching up, despite the Supreme Court orders on telecommunication firms, etc., the stock market is only going up, and I believe this would be a good time for the government to disinvest some of its companies. Air India, they are talking about disinvesting.
Fair points, Gautam, but you know, if I may just come in, fair points, but you're talking about very broad-based government moves. I want to focus a bit more on what India Inc. can do and their part in the entire picture. You know, because the hope has been...
India Inc. needs to just pull up...
Yeah, the hope has been that after the corporate tax rate cut, you will see more investments coming in. But everyone you talk to, especially off record, Sumant here is on record, but you know, everyone you talk to off record, they are a little wary. They're saying, why will I improve or increase capacity till I don't know that the demand is there? So it's sort of a catch-22, isn't it?
But Tamanna, since this discussion is restricted to the budget, I mean, there are several ideas outside the budget, several reforms that the government can do to ease this investment and fix the problems that industry keeps talking about. But I thought this was a budget. I came in late into the program, so I don't know what happened before. No, it is a budget discussion. But I thought this is a budget-related program, and hence, I was only sticking to the budgetary things, what she can do on the fiscal front, on some light policy, on letting investment flows. If you want to talk about how private investors, what the government needs to do, not the budget by the way, what the government needs to do on to encourage investment, there are several other things. For instance, the contracts need to be sanctified, they have to go faster. I think we are very slow on that. It takes 114 days to fight a contract and get it done. Labor reforms, they are waiting for, you know, for decades we've been talking about labor reforms.
Yeah.
The other major reform that needs to be done is land reforms. But I thought these are all outside the budget and not this is not something that Nirmala Sitharaman can do on 1st of February.
Yeah,
so
good point.
When we are sticking to the budget, we only have the macro numbers,
yeah,
or the disinvestment announcements, or if she says that there is money for infrastructure, let the pipelines flow. This is all
fair point,
that she
Gautam,
can
and point
do in the
taken.
budget.
Just one caveat. Let me come to Sumant on this. Of course, discussion is open. Anyone wants to come in, just raise your hand and I will come to you. Caveat on this, the fact is that post-July, the lines have blurred about what happens in the budget and what happens outside the budget. We've been having a series of mini budgets and announcements. So there is no big restriction in terms of statement of intent that the finance minister can give. And Sumant, you would agree that this budget, Feb 1st, 2020, is an extremely crucial one in that sense, because you have to revive animal spirits. Everything that, you know, corporate India has wanted for a long time is effectively done. You have a functioning bankruptcy code, you have a GST, you have, you know, a lowered corporate tax rate. Labor reforms, there have been some movement towards it, but yet no one's putting down the money.
No, but I think, Tamanna, yes. I don't know why there is so much puzzlement about that fact. Yeah. Hello?
Yes, continue please.
Yeah, should I carry on?
Yes, please.
Yeah. No, I'm just saying that there is, I don't know why there's so much confusion about the fact that corporate India is not investing. The simple reality of the matter is that we still have a very low capacity utilization of the current capacities, manufacturing and otherwise, that exist in the country. and people are not going to overinvest in creating new capacities while existing capacity utilizations are so low, irrespective of what the tax rate is. So clearly there has to be a revival of consumption demand and demand also for, let's say, infrastructure. Now on the infrastructure side, there are issues that are clogging up infrastructure investments. Those are really to do with things like enforcement of contracts, sanctity of contracts, policies and regulations in different sectors that are different problems. Those are things that really have to be addressed one by one, and those really will have to be done outside of the budget, on an ongoing basis. It's not necessarily something that has to be done in the budget. But there is one other factor that is really impacting the overall sector very broadly, and that is the issue of the financial market. The financial market today is still fairly moribund. It is not active, it is not lending easily. The cost of interest rates or cost of capital in India is still extremely high, and that is something that is really in some way clogging up all further investments. So I think unless we address the financial markets, and that is really where the finance ministry has a big role to play, whether it is in the form of creating some sort of a window for NBFCs to bring confidence back in the sector, or whether it is some sort of a bad bank type of a structure so that banks can be cleaned up, the troubled asset relief program that was started in the US, something of that nature needs to be done to really kickstart the financial markets. Because right now, yes, the IBC has come into place, and yes, there has been one very large resolution of the SR Steel case now, but it's been very slow. And so there are still a lot of NPAs that are out there that have not been resolved. All of those things have to be resolved very quickly, but it is taking time, and that is really prohibiting the banks from lending adequately. And because of that, and because they are still shrinking their balance sheets, that is causing liquidity stress in the overall corporate environment. And so that, coupled with high real interest rates, is really causing investments to also be depressed. So I think the financial market, the financial sector issues really have to be addressed forthwith. So I think that is a very critical matter. The second thing is corporates in India are also by and large deleveraging right now. And that deleveraging is still going to carry on for a little bit more time, I feel, because leverage levels are still high and the investment opportunities are still not there. So I think because of those factors, you will not really see a large amount of new investments happening, also because of the low capacity utilization that already exists. Now, infrastructure is a big area where there is an opportunity to make large investments happen.
Yes.
But there, things like sanctity of contracts and high interest rates are becoming a burden.
Absolutely, and also on infrastructure, let's bring to point something that we've talked about before on the program, with examples of what happened in Andhra Pradesh after a change of guard in government, or what the fears are, not founded as of now, what could happen in Maharashtra. So you need to know that projects that you invest in will stay that way. I'm running out of time, so Sriram, request you for a quick input. You wanted to come in?
Well, I think I think you need to look at the corporate tax cut, and I think there was some discussion about why there is no investments happening. I think you need to look at the fact that the corporate tax cut is something that is never expected to generate immediate investments, immediate big capital expenditure investments over the next over the 6 month or 1 year time frame. I think there is a lot of what it does is that it makes corporates think that, okay, now my tax basis, expenditure is low. Now, once the demand revives and once I'm in a position to make some investments, I can go ahead and make these investments. Point number two, for new investments and for greenfield capacity, you already have a lower tax rate of 17%, and that has excited a lot of interest. Now, obviously, much of this interest is not translated into concrete announcements or concrete projects being on the ground, but that has really excited a lot of things. And the fact that it is one of the lowest in the world also makes it a very, very compelling thing. So I think we need to wait and see. I don't think one should be, one should just throw up their hands and say, okay, corporate tax has not generated any investment at all. I think it will generate. It will take a bit of time. I think companies also need to solve and resolve a lot of the problems that they are facing right now. There is a bit of a demand problem. There is a lot of problem regarding debt and over leveraging. So that needs to go. The system, the excesses need to get flushed out of the system. I think that has not happened fully. I think once it happens, you will see the big ticket investments coming in. And also, let's not forget that a lot of these investments that we are seeing can also happen in the services sector. We have not given enough attention or focused enough attention on what is really happening in services. That is 55-60% of our GDP.
Yeah.
We have focused a lot of attention on manufacturing where there are enough problems, and those problems are getting resolved a little slowly. But services is another area where a lot of investments can happen and is happening.
No, and I think, Gautam, last word to you before I wrap. I think another area that we don't focus on enough when we talk about corporate India and India Inc., of course, we see the big faces, the big names, the big companies. What about, your SME space, your startup space, which is buzzing, where there is so much headroom for growth?
Startups, I definitely agree,
SMEs,
and I think there is enough activity happening on the startup side. As far as SMEs go, I think the compliance burden of GST is just killing them. I think markets are collapsing. The credits are not flowing straight. In fact, the government is unable to even pay the states. I mean, it has taken a controversy before the money has been going to the states. So I think the GST, which was supposed to simplify everything in terms of indirect taxes, is causing a real problem for SMEs. Of course, below a certain amount they don't pay, but beyond, if you are large enough, you need to pay that GST and get into that system, the compliance burden for which is humongous. Nirmala Sitharaman has said she will try and simplify that burden. Let's see what she does.
Okay.
On the GST, it's again off budget. I think we are going off the budget.
Yeah.
She needs to think about a single rate, single GST rate.
And it's not
Just
only in
one
her
rate,
hands.
that's it.
There's a
Nil
GST
and
council who
and one
decides
rate.
that. There's a GST council who decides that, full of state finance ministers who are wondering when
That's
their
right.
money is
So
coming
the
in.
point is that with 6 and 7 kinds of taxes, it
Yeah.
has failed.
Yeah.
So why not try a new experiment? Let the GST council try the new experiment of just trying one rate. I think it will work. So if you think that the revenue equalization will happen at, let us say, 12%, you put the rate at 14 so that you have some buffer, and then bring it back downwards over the next 1 year or over the next 2 years. I think a single rate GST is the way to go.
Yeah.
As far as the budget goes, I don't think Nirmala Sitharaman has too much flexibility in her hands other
Good
than
point.
breaching the fiscal deficit.
Good point, and there are indications that that might happen. Thank you so much, Suman Sinha, Ashriram and Gautam for joining in on this chat, which will be the first of many as we get into the run-up to the budget. Remember, it's an important one. If you want to stay informed on what could happen, what needs to be happened, this is where you need to tune in consistently.